please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Take a few questions. Hindu?
Yeah, and you have also said that the HRA impact will be there till mid 2018. However, at the same time, you are excluding. You have also given an estimate excluding the HRA impact, which has also been highlighted. Can you throw some light on the issue?
Dr. Patra?
If you recall, in the monetary policy report of April 2016, we did a detailed analysis of the 7th Pay Commission and its recommendations. These recommendations are salaries, allowances, and all that. So, of this, the house rent allowance has a bearing on inflation. Remember that housing has a weight of about 9.5% in the CPI. So that what happens is housing matters to the path of inflation. Now, what the CSO does when it measures housing is that while it collects rentals from all over the country, for the government housing, it imputes a house rent, which is the house rent allowance. Now, when we came with the 7th Pay Commission's recommendation, the house rent allowance was increased by 105.6%. So that is what it would impute, but that is not real inflation. It is just a statistical effect which is boosting up CPI. So what we are doing is just to focus on the real underlying inflation pressures, we exclude house rent allowance from the CPI. So you can see that we have presented those projections and we have underlined them to bring your attention to the fact that when you assess inflation, please exclude the house rent allowance effect because it's purely statistical. So you can see that for the first half, if you exclude housing, the projection comes down by as much as 35 basis points, which is the full measure of the impact of HRA, which started in July and peaked in December and will wane during 2018. That's why the underlining. Thank you.
Because the impact of the HRA on account of the central government wanes, the impact on inflation ex HRA in the second half is not there. So it's because of that in the first half it makes a difference, in the second half it doesn't make a difference. Going forward, as state governments roll out their HRA revisions, we would have to be cognizant that we need to exclude that from the CPI index to gauge the exact amount of inflation. And that first round statistical effect of the HRA revisions from the state governments would also have to be excluded. However, if there are second round effects on account of expectations and aggregate demand, those we will take into account. But the pure statistical effect of HRA revisions have to be excluded from the CPI, and we had telegraphed this in April 2016, so it is just to emphasize that fact. We'll take Wall Street Journal.
Thank you, sir. Sir, I would like to know why have you switched to GDP from GVA, and do you see the economic recovery is strong enough to keep up the momentum if RBI has to raise the rates later?
Request Dr. Acharya to.
Yeah, let me take the question on the switch from GVA to GDP as the headline measure of economic activity. So I think it is mainly to conform to international standards. Globally, the performance of most economies is gauged in terms of gross domestic product or the GDP. This is also the approach followed by multilateral institutions, international analysts and investors. And primarily they all stick to this norm because it facilitates easy cross-country comparisons. So, and as you know, the CSO has also started using GDP as the main measure of economic activity since Jan 15. So even though there are good economic reasons to employ GVA as the supply side measure of economic activity, we have decided to switch to GDP, but for convenience of everyone, in footnote 2 of the resolution, we have clarified what would have been the imputed GDP growth numbers from the GVA numbers that we had provided in February, so you can see what is changing between the two policies. Thank you.
ABP News.
सर, थैंक यू वेरी मच। मेरा सवाल यह है कि जब एक तरफ हम लोग कह रहे हैं कि जो सीपीआई है वो कम रहने का है हमने देखा कि फरवरी में कम है, मार्च में भी कम रहने का आसार है और नेक्स्ट फिस्कल में भी 3 क्वार्टर में कम रहने का है। तो ऐसे में आपने पॉलिसी स्टैंड न्यूट्रल क्यों रखा और पॉलिसी रेट को चेंज क्यों नहीं किया?
The inflation prints for February did turn out to be softer than our projection. Much of this is because of the seasonal softening of the prices of vegetables that occurs during the winter months. However, the MPC looks ahead, and we noted that there are several uncertainties around the baseline inflation path, which is why we kept the stance neutral and the rate unchanged. First, there is the uncertainty around the revised formula for MSP as announced in the union budget for Kharif crops, which may have an impact on inflation, although the exact magnitude will only be known in the coming months as the program is rolled out. So that's one uncertainty. Then there could be the risk of some fiscal slippage from the union budget estimates or over the medium term, which could adversely impact the outlook on inflation. There are also risks in this area from slippages at the level of state governments on account of higher committed revenue expenditure. The companies and firms that we poll in the Reserve Bank's Industrial Outlook Survey expect input and output prices to rise going forward. Lastly, the volatility in crude prices has imparted a fair bit of uncertainty to the near-term outlook, and for these reasons we have continued with the status quo and risks tilted to the upside. We will closely monitor the evolution of these handful of factors and how they impact on inflation, and that underpins the decision that was taken by the MPC today. Business standard.
Thank you, Governor. Sir, now that you have come up with a firm deadline that after March 1, if an account is NPA, 180 days of resolution, etc. Now banks are saying that it will lead to 600, 700, 900 accounts clubbing into NPA or resolution needed for that. So are you concerned that it will lead to risk aversion of banks to lend, and also the investment pattern of companies will be disrupted?
Thank you. Mr. Vishwanathan.
One is, the reasons why we have introduced this revised guidelines is basically because we believe that the IBC has given a framework for resolution of stressed assets, and the development that are happening is giving us comfort that will kind of go in the right direction. The second part is that the default definition is 1 day, but NPA definition remains 90 days. So we do not see why this circular by itself should result in more NPAs coming, number one. What we have of course done is that we have withdrawn those schemes which resulted in banks postponing the recognition, and therefore I don't think we must see it in the light that you are saying.
Thank you. Economic Times.
So good afternoon, Governor. So recently, in one of the public fora, you spoke about the absence of regulatory powers on the PSU banks, and how to control them and how to bring order there. So of it, there have been some instances of reports about some lapses in private sector banks as well. So I'd like to know whether there has been any development from the regulator's point of view on these institutions. Thank you.
Those are two different issues, and they are not related. What was said in the speech and the debate around it relates to the legal powers that the RBI has, which seem to be asymmetric between public sector banks and private sector banks, and therefore that has got nothing to do with our supervisory and regulatory action on any bank concerned.
So that's the time to... You want to take one more question, sir?
So my question is related to the earlier question. Have you been, talking to the center regarding the regulatory powers of the RBI, whether you can, modify them and act tough on the PSUs?
This requires amendment to the Bank Regulation Act. As the Governor has said, the non-neutrality of RBI's powers comes from the provisions of the BR Act, and that needs to be changed. So the Governor has made the bank's position on this very clear. So there will be discussions on this.